Welcome to the MUFG Global Markets Asia podcast. I'm Michael Wan, Senior Currency Analyst with the Global Markets Research Team. And I'm joined today by Japinder Singh, Vice President Treasury Sales with MUFG India. Today is 24th October 2024. The following podcast is for informational purposes only. It is intended for professional investors and eligible counterparties and not for retail clients. Any content should not be regarded as an offer to conduct investment businesses or investment recommendations.
Hi, Michael. How are you today?
Hi, Japinder. Good. I'm good. Thank you.
So a lot has transpired in markets since we last spoke, and there is plenty to unfold. We have experienced considerable shifts in interest rate expectation, escalating geopolitical risk, and change in FX outlook. I would like to begin with US elections and Fed policy, both scheduled for November beginning. Can you please shed some light on what elections outcome could mean for USD and the quantum of rate cut expected from Fed?
Yeah, certainly I think markets are very much focused on the US elections coming up in a couple of weeks. And I think to some extent that explains why both US interest rates have been rising. And also the dollar has strengthened somewhat over the past couple of weeks. And with that, prediction markets have increased the implied probability, not just for a Trump victory, but also for a rate sweep. So in other words, a Republican Congress. So I think the key reason why I think the US elections is so important, not just for global markets, but also for Asian currencies, including the Indian rupee, is that some of the proposed policies by Trump, including 60% tariffs on imports from China, 10 to 20% tariffs on imports from more countries, could have a material impact on both global growth and the path for Fed policy. So to try to answer your question directly, we did put out sort of a scenario analysis in our Global FX Monthly that was just published in October. And our base case assumes a Harris presidency, but we think the dollar probably can be around sort of 7 to 8% stronger in a Trump victory. Notwithstanding the uncertainty surrounding the exact magnitude and the sort of comprehensiveness of the tariffs that can be put out by a Trump administration. There are also other policies that we have to watch out for, including immigration, which could impact remittances from the US to India, for instance. But I think to link all this to India, my general sense is that India should be relatively less vulnerable compared with the likes of the North Asian currencies, but overall should still probably weaken in line with what you see from other Asian currencies, but probably not as much as the likes of the Chinese yuan or the Korean won, for instance. So yeah, a lot to play for in the US elections.
Thanks for breaking this down for us. Moving on to local interest rate expectations. I remember your view from our last discussion and you were spot on. RBI opted to maintain status quo in October policy meeting, although it did shift stance to neutral. Now, given recently China unveiled most aggressive stimulus and other central banks are also focusing to revitalize their economy with lower rates. What is your take on this? And can we expect RBI to align its policy, delivering first rate cut in December meeting?
Yeah, so I think the broader context for India is that while growth is still quite robust based on the indicators that we see, at the margin, there's a little bit of deceleration in terms of momentum, in particular in urban consumption. So for instance, we do see some softening in terms of auto sales, including the four-wheelers. You do see some modest slowdown in terms of GST collections, even as it's still quite robust overall. So I think that's the broader macro context with which we find ourselves in terms of the RBI policy. And I think that if you look at the reasons why growth is slowing down, there are sort of two main reasons, I think. One is that the elections, in terms of some of the slowdown in terms of capex and government spending, this I think should pass over time and should start to rebound over the next few months. But I think the other key factor is that RBI's macroprudential measures have also started to weigh a little bit on growth, in my view, including increasing risk weights in unsecured consumer loans, some of the measures to scrutinize MBFCs more specifically. So I think a combination of that can explain what we're seeing in terms of the divergence in growth momentum. And overall, there's still some fundamental support for growth, including sort of rural spending revival given the good monsoon, including the capex sort of commitments in terms of private capex. Those are still quite robust. But I think with growth slowing down moving forward, I do think that the RBI will have some policy space to start to cut policy starting from December. So like you mentioned, the recent meeting, the central bank started to open the door, I think, to rate cuts by changing its policy stance to neutral. And there's also one new member, or rather one member from the new Monetary Policy Committee, who opted for a rate cut as well. So I think that our call is for the RBI to start to cut rates from December for relatively shallow rate cut cycle of about 50 basis points, both as growth slows down a little bit, and also as some of the better harvesting from the Kharif crop and Rabi crop start to temper some of the food price spikes that we're seeing in the near term, including on onion prices and tomato prices as well. Key risk includes the US elections, like we talked about earlier, and what that could mean for Fed policy. And key risk includes geopolitical risk and what that means for oil prices. But our base case assumes that the RBI starts to cut from December and brings the repo rate to 6% by the first quarter of calendar year next year.
Next, moving forward to dollar rupee, the pair has recently hit record highs and now trading in 84 plus zone. Out of multiple reasons, one seems to be significant selling activity by foreign portfolio investors. Can you please take us through the factors shaping this sell-off and your outlook for dollar rupee?
Yeah, so there's been certainly an air pocket in terms of portfolio inflows, and in particular into the equity markets. And this has been one of the factors why I think dollar rupee has gone up above the 84 kind of levels. The central bank has continued to be in the market to intervene by selling dollars to cap FX volatility. And that's been helpful in preventing sharp dollar rupee spikes. But nonetheless, as you rightly pointed out, it's the portfolio outflows has been a key driver. I think what's driving that is probably a combination of relatively high valuations in the equity markets, combined with what I mentioned earlier in terms of some slowdown at the margin in terms of growth momentum. And I think all this has, together with probably some rotation towards other equity markets, including into China and North Asia, could help to explain why there's some shifting in terms of FPI inflows into the equity markets. So I think more importantly, it's moving forward. I do think that this will probably pass over time. So in other words, I don't expect the same magnitude of sell-off moving forward, both because we don't expect a very sharp deceleration in growth. We're forecasting growth to average around 6.7% next year, so pretty decent still. And also because in terms of the bond index inclusion side, we are still forecasting steady inflows from the JP Morgan GBIEM index inclusion. So I think there's still a lot of good fundamentals for India, and in terms of the current account deficit, that's a little bit sticky, but still quite manageable at around 1.4% of GDP. So our forecast is for dollar rupee to be around 83.5 to 84 as we look forward. But if Trump does come into power in the second Trump presidency, as mentioned earlier, that could change some of our global assumptions on the dollar and the Fed rates and US rates, and that could shift probably dollar INR higher relative to our base case assumptions.
Thanks for your insights, Michael. It's always a great conversation, and we'll soon connect with you again.
Great. Thank you so much, Japinder.
Thank you for listening to the MUFG Global Markets Asia podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you subscribe to your podcast. Contact your MUFG sales representative for more information. Check back again for more insights from the Global Markets Research team.